Okay, so let's explore that bit, and that is where maybe I want to do the first exercise.
Okay.
Alex, if you can share that first URL
Okay.
that I had shared with you to the audience,
Sure.
so
Okay.
maybe if, they can do this exercise as we cover this at our end.
Okay. So, guys, if you are watching us, I don't know how many people are watching. I just posted a link. I don't know if you can get them. So we're gonna do a live exercise here.
Okay.
I just posted it. Um, I just
So if
posted
the
here.
audience maybe can maybe acknowledge or put
Yeah.
a one in
Can
the
you
comment
guys see
section.
what I have put? If anybody are watching us in the group. Uh, if not, then I'm just gonna put it on the comment section after.
Mhm.
This is link number one that we're talking about today.
Okay.
Just right now. So
Thank you, Alex.
I just put the okay.
Okay, so what I want to sort of highlight is anecdotally, as I said, right? We all know that taxes are high, but how high is that, right? Do we really know? And this is the first exercise to just explore that a bit, right? So in my case, what I've done is I've shared the link to the Intuit TurboTax website. You
Hmm.
will find a Canada income tax calculator on that particular at the end of that URL, and it basically helps you visualize as to what your taxes are going to be for the different kind of incomes that you have. So in this example, I'm talking about somebody who maybe has an employment income of
Hmm.
about 85,000. Now that happens to be sort of the average income in the GTA area, right? So
Yeah.
that's
So that's what the average. I mean, that's the upper average of
yeah,
income, right?
yeah.
So if you guys are watching, so put yourself in the situation where you have an income of 85,000,
Mhm.
and uh, and pay a close attention to what he's about to say when it comes to taxes and how this example might benefit you. Please go ahead, Neil.
Sure. Thank you. So again, just discount this number, absolute number for now. If you look closely down, once you put in your income figure in here and you hit calculate, you will find this sort of box or the numbers show up at the bottom here. The thing to note here is your average tax rate, which is going to be which for an income of 85,000 is about 21.03 percentage,
Okay,
which
yeah.
means that for every dollar that you earn, 21 cents, a little more than that goes towards taxes.
Right. Okay.
Um, there's also a term called marginal tax rate. Uh, Alex, do you know the difference between the average tax rate and the marginal tax rate?
Uh, the marginal tax rate and
Mhm.
I kind of know. Please explain to us
Sure.
to the.
So what the marginal tax rate means is for every dollar that you earn above 85,000. So if you earn 85,000 $1, right? So instead of 21 cents going towards taxes for that $1, the proportion increases to 31% or 31.5 cents almost.
Okay, so for people that doesn't get that, what he just said is that if you earn, is it like 63 there, Neil?
So this is
60,
85,000.
85K. Okay.
And if you
Uh,
earn a dollar higher than that, meaning
yeah,
your income increases by $1, for example.
86. Let's say 80,
Uh,
86 or 8501.
yeah,
Uh,
85,000 $1, or maybe let's say 86,000, right?
mhm.
So that 1,000 additional that you earn in your gross income, of that, about 31 percentage, or meaning little over $310, will go directly towards taxes.
Right. Okay. So I hope like everybody gets that if you earn that kind of money and about 31, you belong to a 31.48% marginal tax rate. Okay, so
Mhm.
try to conceptualize that concept that if you earn something, as you know, in here that there's a thing called welcome to Canada taxes. When you earn money that you also have to pay the CRA
Mhm.
some money, and we just happen to be in the one of the uh, high taxes when it comes to income.
Mhm. And again, this number sort of increases as the income increases. So the highest level, it is almost like 54% or 52%
Yes,
of whatever
54.
you earn
Yeah,
goes towards
yeah.
taxes.
I
Right?
think when you go up to about like 100 or close to 100, then that's when it becomes shooter.
Yeah, yeah, it is pretty much hitting the high limit. So it's like 100,000 is not a great, not that great an income anymore in GTA,
Yeah,
especially if you want to buy a
it is not.
house.
Yeah,
But still, so much that you earn goes towards taxes. Now
correct.
that has an implication on what happens to your mortgage as well, and that is where, Alex, maybe if you can share the second link,
Sure.
it helps you sort of visualize
Okay.
what you really need to earn to pay off your mortgage.
Okay, hang on one sec. I'm gonna share this second link. Did I just lost it? One sec, Neil.
Mhm. If you want, I can
And I'm
share.
gonna share this um, on the comment section, like once we have it recorded. So this is the
Okay.
second link that he was talking about. So I just shared that for you guys to understand it. Maybe I should share it live. Hopefully you guys are getting it. Okay, so yeah, so
Okay.
I shared the link.
So, okay. So let's assume that you have an $85,000 income, and you happen to have a $400,000 outstanding mortgage in your principal home.
Mm-hmm.
Okay. Let's also assume that you got about 20 years left to pay down that mortgage, or your amortization happens to be 240 months or 20 years. Your payment is going to be roughly, again, using the best interest rates that we have today, it's going to be about $1,900, $1,921 a month in mortgage payment alone.
Okay, so wait, so what you're doing right now is on this was um what's the first box there, Neil? Did you say the versus 40K, 400,000? Is it
Yeah, so
400,000?
we are assuming a scenario where somebody has a $400,000 mortgage on the
Okay.
principal home.
Hmm.
The amortization I've assumed to be 20 years,
Okay.
and the payment that I have chosen, figure that I've chosen is about 1921. Again,
Right.
people who have that URL can plug in the numbers that are true to themselves. So
Okay.
you
So
can
that
put
would
in
be on
your
the link
mortgage
below,
number.
guys. The second link that I just posted. Okay. So if you watch this on the recording, it's on the second link. Okay. Go ahead, Neil.
Yeah, so you can key in your numbers. So your mortgage amount, what the amortization is, and the monthly payment. And of course, your total income, which is 85,000 from this example, your marginal tax rate, which is the number from here, and also the average tax rate, which is also the average tax rate number from this particular screen. So I'm just trying to sort of link these two URLs and use the output to figure out how much of an income do you really need to pay off a $400,000 mortgage if you're earning 85,000 each year. So using this calculator, you can find that value, and which happens to be, again, you're probably not able to see this appropriately on the
Okay.
presentation, but the numbers I can tell you is, for you to pay down that mortgage of 400,000, you actually need to earn, before paying taxes, about $672,000.
Hmm. So that's what you have to earn. Uh, is that word the first link because it's a little bit smaller, right? So is
Yeah,
that
it is
on the
smaller.
first one?
Yeah, it is
Okay.
small. So people who are doing the calculation at their end, we will to find those the
Okay.
true numbers for themselves, right? So you just have to pay off $400,000,
Mm-hmm.
but you actually need to earn 50% more than that, or I would say maybe 60% more than that, which is 672,000 in order to pay off a $400,000 mortgage, assuming everything is going towards a mortgage.
Right. Okay. Yeah. Okay.
Mhm. Or a minimum of 58,000 or $553,000, considering an average tax rate. So this is the sort of amount that you need to earn to pay off a mortgage, and that is the impact of the taxation that we have to endure,
Okay,
right?
based on the tax. Okay,
Mhm.
based on that tax rate. Got it.
Which means also means that if you have an income of $85,000, whatever you earn for 8 entire years, right? 100% of the income that you earn for 8 years goes towards paying down your mortgage. You're doing nothing else.
Okay, so for people that's in grasp that, so tell me if I get this thing correctly, Neil. So what you pay on the first 8 years, it goes to the
No, I mean, I'm saying whatever you earn, given
uh
your current income of 85,000, 100% of what you would earn, or basically 8 years worth of income, goes towards paying off your mortgage,
if
which
okay, okay,
means
got it, okay.
that much less income is available for you to do, say, for your
Anything else?
retirement.
Got it. Okay, yes, okay, got it.
Mhm.
Okay.
So again, this helps in sort of visualizing the challenge that we have, and
Mhm.
then it sort of motivates people as well to do something about it.
Okay. So guys, so if you are watching this, so this is very, very high technical, so I don't expect you guys to understand this. Okay. That's why Neil is here. I brought him here for a specific reason to go through this technical scenario, just to kind of show you based on what you earn, what you can, like what you're really spending and what you really spending on your mortgage. Okay, so yeah, Neil, please go ahead.
Thank you. So this is sort of I would say one of the big challenges that we have, right? So,